What is the best way to day trade? Finding and understanding support and resistance levels involves looking at charts of price history of a given financial instrument. What we are looking for to aid us in our trading will be addressed in this article. Support levels are price points at which prices have had a hard time pushing down through in the past. In other words, a support level is a level where price stopped falling. Often a support can be found at slightly different levels. For example, yesterday prices moved down to $90 in the morning. Later today they went down to $89.90 before moving higher. Then near the end of the day price touches $89.95 and then moves back up to close at $91. In this example, three support levels were created, but together they can be used to describe a support area. Support areas have more significance than a single level because it shows the market has tried several times to break through a certain level but could not sustain it. In this case, the support area would be 89.90.00. Resistance levels, on the other hand, are a price point in which prices have had a hard time pushing up through in the past. In other words, a resistance level is where prices stop rising. Just as the example under the support level section, resistance can also form resistance areas. Resistance and support levels are dynamic, meaning prices may just edge past the old support resistance level only to revert course. This new price is a new resistance or support level but should be coupled with old support and resistance levels in the same R to create a support or resistance area. Breakouts are price movements in which a support or resistance level is moved through. For instance, if the SPY has moved up to $100 but cannot break above that price, $100 is a resistance level. When the price finally does move above $100, it would be considered a breakout. When price move up to resistance or support levels but do not break through, it is called a test. If prices quickly move back the other way through the support and resistance zone it just broke out of, then it is called a false breakout. In the example from above, if the SPY moved above $100, this would be a breakout, but if it fell back below $100 and could not get back up to $100, then this would be a false breakout. By using support and resistance areas instead of just a single level, we have a better chance of picking levels to watch that have more significance. The more times a price has been tested but not moved through significantly, the more important that price area is. If a breakout occurs above the top of a resistance area or the bottom of a support area, it is more likely a significant breakout could occur. But as mentioned, these areas are dynamic and may expand. Support and resistance occur on all time frames. These levels can be seen on a 1-minute chart, which may only show 1 day of activity, or a weekly chart which could show many years worth of data. If multiple time frames show resistance at a certain level, that level is likely very significant for all traders. Even a day trader can benefit if a breakout occurs on a weekly chart. They may not be aware of that level because generally they are only watching the last few days or a week of price action. A longer-term trader may not be aware of why a major move occurred intraday, but it could be because of technical factors in a shorter time frame when they were only watching their long-term charts. Not all time frames need to be analyzed, but it is a good idea for all traders to look at time frames longer than the one they currently trade on to be aware of larger forces that may be at work. If longer-term traders are looking to enter or exit and they want a good price, it may be worth looking at shorter time frame charts.